All right. Good afternoon, Doug. This is our second podcast of 2022, and seemed it was fitting to do it today because, if nothing else, we can count one of the predictions from a couple of days ago as coming true, at least in the short term, and that is about volatility spiking as the VIX goes from below 18 to over 20 now. So, short term, we're correct, or you're correct about that.
Yeah, and I had a couple of VIXs on, not a big position certainly, and it's treated me well. I've closed out half of them, which probably means it's going to go to 30 or 40 now since I sold half of that position. That's the way it works.
Murphy's Law.
Yeah. Okay.
But there's
more volatility.
But there's lots of strange economic data though, and go ahead and I'll get into that in a second.
Oh, I was just going to say, this is hard to capitalize on type financial information because, as we were talking about before, if somebody agrees with that premise that this is going to be a volatile decade, pretty safe bet, and they want to play the VIX, there's so many things that can go wrong, most of them taking place to the right of your left ear and the left of your right ear, that will screw you up. And even though you're on the right side of the trade, you wind up losing money. It's very, very hard effectively trading commodities. So it was, once again, just kind of an academic FYI mention.
What do you mean? What do you mean that most of the problems that happen when trying to trade these things happens between your ears?
Okay, well, let's figure that out. Let's say you get lucky and you buy the VIX at 19 and it runs up to 20 something. They say, oh, I've got a profit. But now the question is it going to go up or down? And of course, you have people that read charts. But reading charts to me is like reading tea leaves. I like to look at charts. It gives me an idea of relative value. How low something's gotten in the past, how high it's been in the future. Where does it seem to be moving? Okay, this is valuable information to know. But a lot of people look at these charts as if they're predictive, and I actually don't see it that way. I mean, friends of mine like Bob Prechter, have made a career out of that. Jim Dines has made a career out of looking at charts and, saying, this squiggle is a double top or a head and
double
shoulders.
Bottom, death cross, whatever.
All kinds of stuff. And I just don't buy it. So the question is the trend, clearly the long-term trend is in motion, but maybe it's going to drop back down and you'll lose your profit and wind up with a loss. So then you might get scared and sell out at the bottom, because now that you got a loss, you don't want it to be a bigger loss. And anyway, if you don't have adequate capital, you're going to get a call from your broker and he's going to say, either send me more money or sell out. Probably it'll be selling out at the bottom. But on the other hand, you don't want to send him more money because anything can happen. That's one thing I found in the markets. Absolutely anything is possible. Anything can happen.
But what you did with this VIX, you just said is that once it went up, you sold half your position. For this is just from a few days ago. So what was it that made you decide to sell part of that position?
Richard Russell used to say this a lot. And he's not the only one that said this, but he liked to emphasize it. And he said, there's two rules in investing. Number one is don't lose money. And number two, don't lose money. But it's dangerous following that rule because you wind up cutting your profits by grabbing the money while it's there. And it could be the start of a huge run where you only need one of those a year. So it's
to offset everything. Yeah.
It's very high. Look, what you want to do is find Berkshire Hathaway at the price that you could get it at in 1971 and just keep putting money in it and forget about it and do something else with your time. But you never know if it's the next Berkshire Hathaway. And even then, you didn't know if Berkshire Hathaway was going to be Berkshire Hathaway. It's very hard. It's only easy in retrospect, okay?
Yeah, that makes sense. But it does seem like things are expensive now. And you mentioned at lunch yesterday that it just felt like the markets were closer to rolling over than not at this stage.
Seems that way. it just seems that way to me. But, you know, I've kidded myself that that was going to happen a number of times in the past, and they've come back stronger than ever over the last 10 or actually 15 years. So
Who
it's
knows?
just, yeah, but I don't want to be in them because as I look at the markets, I say, relative to everything that's happened in the past and everything that I'm pretty sure is going to happen in the future in the wider world, this is just way, way too much. So I want to put my capital aside someplace where it'll be safe. And I don't even know where it's going to be safe. Basically,
Yeah.
gold and silver coins. I mean, really, if I want to speculate, it's resource stocks, which are the most volatile class of stocks in the world. You can make a fortune and then you lose 95% if you don't sell them, because that's what happens. They collapse. So it's very tough. But right now, I think is the time to buy them. But listen, we've talked about this in the past, maybe not too much. But one thing I've learned in the resource stock business is, yeah, you can be on the right side of the trend when stuff is cheap and you buy stuff in the market. That's like now. I think now is one of those times. But where I've made real money in the past has been when the table is not an even playing field. I don't like an even playing field, a level playing field. And everybody says, oh, we got to have a, I don't want that. I want as close to a rigged game as I can get. And in this area of the market, actually in all areas of the market, quite frankly, you got to know the right people and be in the room when the deal's being structured. And you can see, you know, being a mooch retail investor, I mean, you basically can. It's very tough. And to get yourself in a position where you're in the room when the deal is being structured, it takes years and it takes personal relationships and it takes a lot of knowledge, which you can't just get overnight. And it takes experience, which you need to interpret the knowledge. So I don't know if this is very helpful, even saying any of it.
Frankly. Well, but I do think I mean, you obviously, there is an advantage you get becoming, as you get closer to the market participants, to the people who are actually building and creating things, creating the companies, right? I mean, so that's where you've had a lot of success. But I think the other part of it is managing your risk. And that goes back to the very beginning of this. And I think, you know, it is, you hate to sell a winner because that winner might turn into this huge winner. But at the same time, you know, the losses have to be avoided at all costs. You have to be able to continue, at least not at all costs, but you have to be able to continue playing the game. And I think where most people do make the mistakes is that they become, I don't know, near religious about their investments, you know, whether that be gold or silver or Bitcoin or something else. And they really can't, you know, they can come up with justifications for continuing to own it, even when it performs poorly or when it performs, you know, all the time. So.
Yeah, like look at all the high tech stocks today. I mean, it's just 1 year of red ink after another year of red ink, and the stocks keep going higher. So on the one hand, the trend is your friend. So why not stay with it? But on the other hand, if it's losing money every year in a bubble market, well, what you got is a burning match, and you're gonna.
Yeah.
So how are you gonna play these things? I mean, it's.
You know, I think one of the big advantages that you have, and may probably have always had over others, is that you have a really good understanding of history. And I think that I was listening to a podcast yesterday, and they were talking about more about societal stuff. And one of the things that one of the guys brought up was well, you know, there was this massacre in Rwanda, you know, and the guy's like, oh, I've never heard about that. He's probably 30 or 32 years old, you know. So it's like, I never even heard about this thing in Rwanda. And he's like, well, that was when Bill Clinton was president.
Happened the year he was born, more or less, yeah.
Exactly. And he's like,
nobody even knows how many people were killed, but it was basically all done with machetes because they don't have that many guns. And they guess, in between 500,000 and 1 million people. That's a lot of people to get hacked to death with machetes.
It's a shocking number. And the fact is that people don't even know about these horrific events that occurred basically within their lifetime or the range of their lifetime. They don't even know about those. So the more esoteric trends, within the market, how gold has performed historically, like, what the dollar is all about, what tech stocks, it wasn't that long ago that they were in bubble territory and then evaporated to next to nothing. Like without that historical context, I guess it's very easy to get, I don't know, to get sold down the river, I guess, and going along everything.
Yeah, and the more you know, the more you realize you really don't know anything.
Don't know anything.
That makes you really cautious, and if you're overly cautious, it's almost a cosmic problem, isn't it?
It is. Like we were talking about yesterday, the utility of uninformed optimism, in our lunch conversation, how useful it is. Yeah.
It really is. And look at Warren Buffett, smart guy, knows the ins and outs. He's in the room when the deal, everything. But on the other hand, historically, when people look back at this, 100 years from now, and God knows what the world is going to be like then, people are going to say, yeah, Buffett was very, very successful, but that's because he was involved in the markets from 1970 to, let's say, this year, which was basically a pure bull market the whole time. All you have to do is own shit and stay long.
The largest expansion of credit in human history. Who could lose?
That's right. Everybody's a genius during a bull market. But some people like Buffett really are smarter than others. I mean, he knew enough to be right and sit tight, to quote another aphorism of the market that everybody likes to throw these things out. And they're right, but how useful are they when the rubber hits the road?
Well, they're incomplete. They're incomplete because there's also a bird in the hand is worth two in the bush, right? That's the exact opposite of that. And it's also true.
I know. That's right. And, what's that phrase? To the victory favors the bold,
Yeah.
Yeah. Well, open up a commodities account and be bold. I'd like to know what happens. I mean,
Good luck. Good luck. Yes. All right. So let's talk about some of these economic headlines I saw today. Just curious about your reaction to them. And, certainly a big part, we do see inflation still ticking up everywhere. I think we're at just under 7% officially in the US, 6.8%. And the Eurozone now has an inflation rate, a record high of 5% in December. Does this get out of hand? Does the inflation rate get out of hand for the EU and the US, in your opinion?
One of the problems with the reporting of inflation rates is it just gives selected retail inflation put together by bureaucrats that would like to have it look as good as possible. That's why you can't trust any of the numbers coming out of the Argentine government, because they always want to make it look better than it is. So they're not under as much on the hot seat. And I'm afraid the US is becoming much more like Argentina in many, many ways. But that's number one. But number two, that's retail price inflation, misguided and fudged as it is. But all this money they've been printing, there's another kind of inflation, good inflation, where it's all gone into the financial market, stocks and bonds and real estate. So that's where the inflation has been, because that's where all the money is gone. But like we were talking about at lunch the other day, it's that, that good inflation created a lot of distortions, which is eventually going to result in some type of a market collapse. But the interesting thing is that it's only the upper middle classes that are able to profit from good inflation, because only the upper middle classes have the money to be in the stock market or have meaningful pension funds or own bonds or houses, the kind of stuff that goes up. So this has been wonderful for them. But the average guy, the working Joe, the proletariat, if you would, who's got a salary job and, got to pay $4 or $5 a gallon for gasoline to drive an hour each way. He doesn't have any of those financial assets. But, beef has gone up 25%, lumber is quadrupled, almost quintupled now, because it's back and it's running back up again. I mean, major costs for building a house. I mean, oil back at $80 a barrel. So the little guy that's got to use his salary to consume, he's getting hammered. He's getting screwed. So, this thing about the rich getting richer while the poor get poorer, Marxist idea. Maybe this is a reason why Marxist ideas are becoming popular with people. They say, yeah, that's what Marx said, and he's right. Well, yeah, he is right. In a fascist economy, that's exactly what happens. Marx was right, actually, in that regard. And
What do you think
happens,
about these? I mean, the thing with all these statistics that come out, it almost causes a cognitive dissonance because the numbers don't make sense if you're looking at them. I mean, they just don't jive in any congruent way. For instance, last month in the US, the payrolls were expected to, new payrolls, new jobs, was supposed to be, it was estimated to be around 420,000. But it ended up only being 199,000. I mean, they were dramatically off, like not even close, the predictions for where that would end up. And we also have, at the same time, we know, we talked about last time we spoke, that 4.5 million people quit their jobs. So those were quits, not terminations, but people who actually walked off the job. Now, in all of that, though, the unemployment rate fell to the nearly its lowest rate in 50 years. It's below 4% now, the unemployment rate. Like, how is this even possible? If we're not creating jobs, then 4.5 million people are walking off the jobs. Like, how is it possible that the unemployment rate, I mean, the statistics, are they just all lies already?
Yeah, who puts these numbers together? Because I think even officially, there's like 8 varieties of unemployment, 8 definitions, and 8 separate statistics of unemployment. And I guess they always quote the one that's lowest, but there's all kinds of people that are out of the labor force for all kinds of reasons that doesn't add them into the statistics. So I really don't believe any of these numbers at all, quite frankly. I mean, they're interesting because it tells you what I guess most other people believe.
Yeah, that's true. It's true, but it's just...
And it basically comes down to, well, who are you going to believe? The statistics or your own lying eyes?
Yeah.
And well, not being out here on a farm in the middle of nowhere, but very comfortably ensconced. I don't know. You can just see a big field out there. It's not in soybeans at the moment. It's being used for cattle this year and hay, actually. Gee, how connected am I to what's happening boots on the ground in downtown Montevideo or Punta del Este? The answer is not very. So I have to rely on what I hear in the statistics and so forth. But it's problematical. One thing I did hear that is boots on the ground that's interesting, because we're both of the same mind about COVID and the fact that it's hysteria evolving in a psychosis and we don't know what we're doing, or nobody knows what they're doing because there's a blackout on information and discussion and proper medications, or it's just a complete, as our friend Jim Cussler would say, it's a complete clusterfuck because nobody knows anything. It's horrible. But I was talking to John Hunt today, and he's you and I know him well. I guess some of our listeners might know him because he's the co-author of the 3 novels that I've done with him. And John was a tenured professor of pulmonology at the University of Virginia and practicing MD in addition. And he's also on the board of a big medical
healthcare system.
Yeah, all the hospitals and all this kind of stuff. So he's pretty much an insider, and he quit UVA just because he just couldn't stand the environment. And as far as he's concerned, practicing medicine is too frustrating to be worthwhile. All the doctors today, not all, but mostly, they're all employees of corporations. So they tend to act like employees as opposed to independent scientists, which is really what they're supposed to be. So you can't believe anything. But here's what's interesting. So John and us we're totally on the same wavelength about this whole thing with the COVID hysteria and the fact the disease itself is, you don't want to get it, but it's not the bubonic plague either. And so turns out that John and and his girlfriend. They're partners, not married.
Yeah,
his wife
partner.
stayed as a third partner
Yeah.
relationship. So anyway, they both have it right now. And Kimmy has lost her sense of smell and taste. So that sounds like classic COVID, the old kind. But on the other hand, from going downtown into the little towns, because John and I live pretty close to each other, says it looks like everybody's got, a mild form of this. Everybody's sick. And of course, wherever you can get tested and you pay money for testing, I mean, there's lines around the corner, and that's what I call firsthand information on the ground. So I don't know.
Wow.
That's
I will
what
say, the only thing I've seen relating to any of that in person is just coming to the beach house here yesterday, and then again later this morning. There's a huge line outside of this pop-up COVID testing place. Huge line. I mean, I think the first time I drove by it, there were probably 150 people waiting in line for tests. It's unbelievable. Yeah, and this is it's like in La Barra, out in the middle of nowhere, really.
What are they paying for those tests here in Uruguay?
It's about $100, about $100, $125. Yeah.
That's big money down here.
I know, and
average guy.
Yeah, and what I'm trying to, I'm trying to figure out, do they actually need this to go into some of the big parties they have out here on the beach? Maybe that's what it is, or or are they doing it because they're flying back to Argentina? I mean, I'm not sure. I gotta ask some more questions. But I was shocked by the lines for these tests, and I don't know if it's their own fear that they want to get tested, to make sure, or if it's actually a bureaucratic requirement for them to participate in things. I mean, everyone here, if they're coming from Argentina, probably vaccinated already, or else they wouldn't have. So yeah. Anyway, it's strange.
Yeah, a little bit of both, but I'm pretty sure that after this Omicron thing, whatever it is, burns out, because that's what happens. Viruses go viral. That's why we have the expression, viruses go viral. Okay, fine. They burn out. And then the next thing. So I presume there's going to be a next one and a next one and a next one. That's just seemed, it's the great reset. Yep. I mean,
that's right.
I mean, you'll own nothing and be happy. I mean, look, bread and circuses. The bread is everybody in the world has big flat screen TVs, and you can watch all kinds of endless series about, people living real lives. So just sit there and you get your food delivered and the government sends you money. So sit down, shut up, and be quiet. And actually, as feedlot cattle, most of us are feedlot cattle. We're not even free range cattle. Forget about wild cattle. That's what everybody imagines themselves as, wild buffalo living out nobly out on the plains. That's all bullshit. I mean, almost all of us, I guess, including ourselves, are free range cattle. Well, we think we're pretty free, but there's a fence over there and you can't go up. And even more people, the vast majority of people are feedlot cattle. They're like shoulder to shoulder, sitting there eating the silage and the corn, and they don't even know they're feedlot cattle.
Well, it seems like people would prefer to be feedlot capital. It's got much denser protein sources right there. They don't have to move as much. It's like people want it almost. Yeah,
it's pretty easy. I mean, not much danger you're going to die until
the end.
Until you find out why you're in the feedlot. But
exactly.
God, this is further proof that we live on a prison planet, as far as I'm concerned.
It is. It does seem that way. So I want to ask you two other economic statistics I saw today that I think are worth mentioning just because they're so out there. One was that the number of new vehicles in the U.S. that were delivered collapsed last year from its low that it already was in 2020 to a 1978 level. So when there were 100 million fewer people in the U.S., we bought as many new cars as were delivered in 2021. That number shocked me when I told you about it? You didn't seem as shocked as I thought you would. Why is it? I wonder what.
I was thinking about that because on the one hand, if a Martian were to examine the US or Western Europe for that matter, from a distant figure to the major dominant life form on this planet are cars. I mean,
Cards.
there's just lots of them. But, you know, figures from 1978, that was, I think the crappiest cars that were ever made were made during the late 1970s.
Yeah,
That was
true.
that was kind of like the late federal period where they had these big, heavy, clunky, ugly bumpers, and the engines had no power, and they were uneconomical, and the cars were basically junk. So I don't know, you got to pick the year that you're going to examine. So the late 70s would have been one of the worst years. And also that was a very high interest rate environment. It was moving into the early 80s when we're talking, 15% and more interest rates.
Well, certainly people actually paid for their cars then too, I bet. They actually bought them.
Yeah, that's true. They did. Because another thing that people forget is that in the old days, the before times, you knew when you could afford a car, when you had the money in a bank account to buy
To
it.
pay for it.
And you bought the car, you buy groceries, you give them cash. And then it was 2-year financing, then 3-year, 4-year, 5-year, 7-year financing. And then cars became too unaffordable for that. And it became leasing a car. So instead of having a small asset, albeit with a lot of debt against it, you had an immediate liability, the lease, because you never owned anything. So that's on the one hand, but this is the problem with analyzing this kind of situation. That's on the one hand, what we just talked about, but on the other hand, the advances in technology, I mean, cars today, they last forever and they're economical. I mean, you buy a car, unless you want to impress somebody, because they don't really change much from year to year anymore. There's like a new model year where last year's Chevy looks a lot different from this year's Chevy. I can't tell the difference between a Chevy and a Toyota. Forget about it when I look at them. Forget about the model years, really. And I speak as an ex-car guy. I don't care anymore, frankly. No. They're just transportation. Too many speed cameras, too many cops, too much liability of going fast.
All the fun of driving has been taken away. That's for sure.
And perversely, at the same time as that's true, the price of used exotic cars has been going through the roof. I mean, I was talking to a Porsche dealer the other day, because I've always had Porsches, and like a 1996 twin turbo, which I owned, has gone from being worth about $140,000 a year ago to like $250,000 today.
Holy shit!
I kid you not. That's
wow.
That's what it says, and it was confirmed by somebody that was actually in that market. It says, yeah, they just caught fire for some reason, like some hot stock or something like that.
Wow.
But people are paying $1 million or $2 million or $3 million for Bugattis and special Ferraris. And this is all completely insane. And nobody drives these cars. They put them in their 10-car garage and store them as collectibles, sure that a greater fool is going to buy it. Just like I'm sure that during the late 1920s and early 30s, people were buying Cords and Duesenbergs. And then 10 years later, they were in barns with chickens under the hood.
Up on cinder blocks.
Yeah, exactly. So it's all cyclical.
All right. Well, let me ask you one last economic data point, which I saw, which relates to Uruguay.
Answer is I don't know, but I don't want to own almost any stock. All these big corporations are woke and corrupt and inefficient, and they got to have females and blacks on the board of directors for God knows. So it's bad from that point of view, and I don't know.
Yeah, the woke everything, fake everything is certainly dominating. But so let me ask you about one specific move that happened here in Uruguay, where the central bank raised its rates from 5.75% to 6.5%. I'm just, we never really talk about Uruguay, and we both are here now. So I'm just curious, what do you think about that? Have you heard about that? It seems like it's sound policy on their part to increase rates as inflation goes up.
Yes, it impresses me that way too. Just like the fact that our two Uruguayan friends that we had lunch with the other day were unaware of the fact that the government had raised the number of guns you can own here from 3 to 8, which is still far too few, but still a trend in the right direction. No, and I didn't know that, what you just mentioned, but listen, since the average Uruguayan or Argentine or anybody outside of major economies, if they want to get ahead, you got to save money. And what can you save? The only thing you can save is the local dog shit currency. But when they keep interest rates at artificially low levels, below the level of inflation, it means that the poor average guy is losing in real terms every year. So bravo to the Uruguayan National Bank for doing that. Yeah,
I thought so too. I was surprised, but I was surprised that, and I know some central banks around the world have begun this process of raising rates, elsewhere. I've seen that elsewhere, but it's good to see it happening here too. So, that's great.
But I think that this whole bubble is gonna get out of control, and these central banks are not going to be able to control their currencies. They're printing up trillions of the damn things. And, at some point, whoever owns bonds, whatever idiots own bonds, mostly institutions today, are just going to figure, wait a minute, inflation is actually running like 10 to 15%. Who knows what the actual number is, but I think it's that kind of number or more. It's just you don't see it so much because it's going into the financial market, like you said, not retail stuff yet so much. And all right, so they stop buying bonds. They start selling all the bonds they have. They don't want to get left holding the bag. So then what happens? Then interest rates are going to explode because nobody's buying the bonds. So you got to offer more interest so somebody will consider it. Yeah. And then the Federal Reserve, which has got, I don't know, 4 or 5 trillion, I don't know how much they even have in terms of bonds, which they bought at like 2% interest rates. Interest rates go back up to 6%. Their bonds are worth about a third, depending on the maturity, 40%, 50%. So then the Federal Reserve is bankrupt, which would be wonderful. It should go bankrupt.
It should.
This is all a disaster. But people, we're all kind of living we're like sleepwalking towards disaster. I think it was Barbara Tuchman used that phrase. I think it was sleepwalking towards disaster, which is pretty much what Europe was doing in early 1918, before everything came unglued. 1914. Early 1914, before things came unglued in July and August of that year. I think it's pretty much like that.
Yeah. It's hard to say how it will unfold, though. It'll be interesting. I mean, yeah, it's hard to say because all these things seem to conflict. Like I said, jobs going down, but unemployment rate going down, but the benefits the government is paying going down, car sales going down, and yet our economy is supposedly doing spectacularly well. And I'm just waiting for something to drop on this.
Yeah. I mean, I trust that about as much as I trust Don Lemon's reporting on, where is he, in MSNBC or CNN, one of those things. I can't
CNN, yeah.
Right. So,
who knows?
Or you can, I actually like to watch Rachel Maddow when I get a chance, because, she's kind of like a really opinionated, nasty schoolmarm, but she raps pretty good within that context. And I just like to know what these people are thinking.
So much of her stuff is just so totally unhinged, though. It's like, so either I'm living in a complete fantasy world, or she is.
Pretty much, yeah.
And I like to think it's not me, but maybe it is me. I don't know.
Yeah, we're in alternate realities. Actually, you listen to these people, and it's clear that we're actually living in parallel realities that don't intersect too much.
No. Maybe they just need to totally break off from one another and all will be fine.
They should, and they will when the U.S. Gets into a real crisis and then reorients politically, probably with breaking up, as improbable, as impossible as that sounds. But that was kind of talk currency like a year or 2 years ago, that we're going to have a civil war or something like that. I still believe it. I think
still believe it too. It seems like the possibility is growing by the day. So, okay, well, I think we'll leave it there for now, Doug. I do want to talk about, as over the weekend after things sort of develop, and I know we don't know what's really going on there, but a little bit about Kazakhstan, because it seems like that's a big flashpoint that's emerging. And I know we don't know what's really happening there, but
No.
it seems like it's a color revolution, but it also could be, definitely can escalate pretty quickly from there, especially as, the Russians now sent troops in there to help kind of quell things, under their version of NATO, essentially. It's very interesting. And they shoot to kill orders on people that are protesting or rioting.
Oh, well, I'll have to do some research, but I've been to Kazakhstan a couple of times, actually, and I thought it was weird. I went to several cities around the country. It's a big damn country. How big is it? I mean, it's at least the size of the eastern U.S. It's a big, big place. But I don't know. I'll do some research over the weekend, which will probably mainly be watching Borat movies.
If you good. Well, I'm looking forward to what you find in your research. We can talk about it next week.
Okay. All right.
All right. Thanks, Doug. I appreciate it.